Is that a cool down I'm feeling? No, I'm not talking about the weather. I'm talking about the Arizona real estate market. Hey y'all, I'm Heidi Littleton, a realtor here in Phoenix, Arizona. Today, I'm giving you the lowdown on the September 2023 Phoenix housing data you need to make an informed decision as a buyer, seller, or renter in Phoenix, Arizona. Well, mortgage rates have not gotten any better. In fact, they've gotten worse. Mortgage rates have hit their highest level in 20 years, and the impact on demand can be seen in the numbers. When first-time homebuyers talk to their parents or grandparents about today's mortgage rates, they may get a response similar to, "I purchased my first home in the 80s at 10 to 18%. In fact, some carry their high mortgage rate like a badge of honor because it turned out to be a great decision, despite the uncertainties of their time. In their 20s and early 30s, baby boomers endured 4 recessions, 4 rounds of high unemployment, and erratic mortgage rates that started from a low of 7% and rose to a peak of 18%. However, those that got in the game where they could, with a long-term mindset, were rewarded and are looked upon as lucky to have gotten in when they did. Flash forward to 2023. While admittedly, there is a large swath of buyers priced out of purchasing a home due to mortgage rates up to 7.5%, there are a number of them who have the means to enter the market but are waiting for mortgage rates to decline. Their mindset is not unlike those buyers who waited for prices to come down when rates were below 3% 2 years ago and now regret it. Waiting for the perfect home at the perfect time, at the perfect price, and the perfect mortgage rate is an exhausting and futile endeavor. The reason being that when all of the perfect boxes are checked, there is a line of competing buyers that are making the experience, well, less perfect. So a quick tip right off the bat, take the leap when it is right for you, when your payment aligns with your budget and lifestyle. As I've stated many times, there's no point in trying to time the market. It is a losing game. Let's chat about demand. As Greater Phoenix moves into the last few months of 2023, seasonally, this is the best time to be a buyer. Active listings are rising as they typically do in this time of year, providing more selection. The median sales price is $45,000 below the highest peak of May 2022, and prices are stable for now. These months are typically slower than the spring, but competing demand for homes is further suppressed by mortgage rates. Thus, 45% of sales involve seller-paid closing costs that often include a rate buy-down. Closing cost assistance is one of the first things to go when rates decline or buyer competition increases in relation to supply. Since January, the percentage of sales with assistance has dropped from 51% to 45%, and the median paid sellers has dropped from 9,700 to 8,500. Things aren't perfect, but 3 out of 4 isn't bad. Sellers, listen up. Currently, the median number of days prior to a seller obtaining an accepted offer is 22 days. However, going into the last few months of the year, you should allow for an extra week or 2 as the calendar approaches year-end holidays. Historically, properties that are listed in October are on the market for a median of 2 to 4 days longer than those listed in September. However, properties listed in late October, early November are typically 10 to 14 days longer. As sellers approach longer marketing times in October, it's common to see both active listings and price reductions increase. This year is following that expectation, and weekly price reductions are on the rise, up 36% since the beginning of July, but still down a whopping 60% from this time last year. Weekly price reductions are expected to continue to rise gradually from now until they peak in early November, so sellers planning to list within the next few weeks may want to budget for at least one in their strategy. Make no mistakes though, the market still favors sellers. So far this year, sales prices have appreciated 6 to 7% over the past 8 months, with 11 fewer days on market, and tighter negotiations within just 2% of the last list price on average. Sale prices are expected to continue rising mildly for the next 3 months. Let's take a look at the Cromford Market Index. A value of 100 indicates a balanced market, which means our appreciation will be in line with the rate of inflation. Values below 90 indicate a buyer's market, and appreciation will be negative, while values above 110 indicate a seller's market, which means appreciation will be higher than the rate of inflation. We are currently at 142, and yes, we are seeing a decline. This isn't like a plummet, it's a gradual decline. New listings remain scarce, but the flow has increased over the last 2 months. Demand is so poor that the active listing count is starting to build and is up 12% over the last month. However, it remains well below last year at this time. If you plan to buy a home or bought a home and plan on living in it for 3 to 5 years, no need to panic. If you are doing a short-term hold, be very, very careful and ensure you have enough wiggle room to hold longer if needed. So, who's living their best life right now? New construction. Demand remains much better in the new home market. The dollar volume for new homes is not only higher than every year prior, it is up a massive 11.5% from last year. Developers are happy to agree to use some of their gross margins to buy down lower mortgage rates for their customers, at least for the first year or more. 2 cities have moved in a direction favorable to sellers over the last month: Cave Creek and Tempe. However, these 2 are only just positive, and their change over the last 2 weeks is still unfavorable for sellers. In any case, these are 2 of the smallest of the 17 markets, and the general direction of the market is swinging towards buyers. Supply is increasing and demand remains extremely weak. We can also see that the market is becoming more favorable to buyers at an accelerating rate. The average Cromford Market Index change in these 17 cities over the last month was negative 9.5%, more negative than last week when we measured. Most negative again this week is Chandler, down 28%, though it still remains in first place. Goodyear, Buckeye, Maricopa, Mesa, and Gilbert are also much weaker than this time last month, down at least 13%. 13 out of 17 cities are still sellers markets, with Buckeye, Goodyear, Queen Creek, and Maricopa in the balance zone, meaning buyers may have a slight edge in negotiations. On the current trajectory, these 3 could be buyers markets by mid-October, with Buckeye not far behind. Supply remains well below normal in most areas, but Maricopa's supply index is now over 100, joining Casa Grande. Litchfield Park looks next to breach the 100 mark for its supply. Supply is still extremely low in Anthem, Chandler, El Mirage, and Gilbert. Now to the nitty-gritty for you data nerds like me. Active listings were 11,969, up 12% from last month. However, this is still down 33% from this time last year. New listings are still scarce, but they are less scarce than a month ago. This trend is looking like it will probably continue until mid-November, when the usual seasonal decline in active listings due to holidays is likely to kick in. This is good for buyers since they will have more choice and a little extra negotiation power. Let's chat about prices. Price readings have something for everyone, with the average price per square foot for closed listings up sharply and now 3% higher than this time last year. However, the median sales price is 1.6% below last year and slightly lower than last month. Weird, right? How can both be true? This strange and unusual behavior is caused by pricing in the luxury market remaining stronger than in the average price points. In fact, the luxury market is having the 3rd best year it's ever had. This is why it is so important to ensure you clearly understand any data that you may see on the news. Using the average price is more affected by the luxury market and the seasonality that comes with it. Having said all of that, if we only look at homes under 2,500 square feet, we now see the average price per square foot come more in line with the median price. Looking at median sales price appreciation, because let's be honest, we all want our investments to grow, we are actually up 4.8% from the low at the beginning of the year and down 2.2% from this time last September. To put this in context, from May to December 2022, median sales prices fell 13.5%, so we've already recovered 35% of that decline. Again, keep in mind, for most of us, real estate is a long-term investment, meaning 3, 5, 7, 10 years. And looking at those numbers, many have quite a bit of equity in their homes. Let's chat about seller concessions and over-asking sales. As I mentioned before, we are seeing 45% of closed sales have seller concessions, with the average amount being about $8,500. Buyers are still trying to meet sellers halfway, with 22% of closings going over asking price. Let's chat briefly about the rental market. Median rental in Greater Phoenix for a single family home is about $2,165. We've also seen an increase in rental supply. One reason for this is a large chunk of those build-to-rent homes in Buckeye were recently completed and sold to Progress Residential. I know this all sounds dismal, but it's not. Keep in mind two things as you think about where we are headed in the coming months. Number one, Phoenix is still a hotbed for companies looking to expand or move here. And based on the data from the Fed, the wage income in Maricopa County continues to rise. This is great for the housing market and affordability. As always, if you have any questions about buying, selling, or the Phoenix housing market, don't hesitate to call, text, or email. All of my contact info is below. If you found this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more updates, insights, and the latest Phoenix real estate market data. Until next time, happy house hunting.